Good afternoon, everyone, and welcome to our summit panel discussion, Modernizing High-Value Payment Systems, A Global Perspective. I'm happy that you're able to join us today. My name is Mike Hoganson. I'm the Director of Modernization at Payments Canada, working on the Links Modernization Program, and I'm pleased to be joined by my peers who will be providing some insights on modernization of high-value payment systems, looking across the world in Europe, in UK, and the US. Oftentimes when we think about modernization and high-value payments, there obviously is a dominant theme around ISO 20022 and the work that's being done looking out over the coming years. Obviously on today's panel, we will be definitely touching on ISO 20022. It is a key piece, but we're really thinking and looking to explore a few different areas around what's driving modernization within these jurisdictions. And what are some of the key takeaways? We want to talk about how high-value payments fit into obviously the cross-border space. If we have time, we'd also like to explore the relationship between high-value payments and real-time payments. In terms of the structure of the session today, we'll have each panelist provide a brief update on the status of their modernization efforts. And we've got a few questions as well that we will be discussing with the panel. We will be leaving some time at the end of the session to answer audience questions. So please use the chat room to ask your questions. And we will try to get through as many as we can near the end of the session. So without further delay, I'm going to pass it over to the panelists to introduce themselves. And I'll start with Richard.
Mike, thank you for setting the stage. Richard Dzina from the Clearinghouse, where I have responsibilities for our chips and check image exchange product lines. I have just completed my 1-year anniversary at the Clearinghouse, following a career at the New York Fed, where I had responsibilities for the wholesale services. So it's great to have perspectives now from both private and public financial market infrastructures. It's a delight to participate in the panel today, and I look forward to our rich exchange.
Great. Thanks, Richard. James?
Hi, my name's James Southgate, and I'm Senior Manager for our RTGS Renewal program, which set up 3 years ago now. It's already been a fairly long journey and still very much on that journey, but I'm responsible for policy implementation in particular. So that includes the introduction of ISO 20022 into CHAPS, our high-value payment system, but it also includes some of the new innovations that we're bringing in with our new RTGS core ledger. I'm a bank lifer, well, so far at least, 18 years, mostly working in payments, including our own customer banking division, so us, a central bank as a bank, and include payment system supervision as well. So sitting on the other side of the regulatory fence. Again, very grateful for you inviting me, and very grateful, I think, for hosting this session as well. It's an interesting take, and as you say, there's far more to the story than ISO 20022, which obviously is a key area of focus at the moment, but it's in a broader context. So thank you very much.
Great, thanks, James. Jean?
Thank you, Mike, and thank you for having me. Good afternoon, everyone. My name is Jean Clement. I'm working at the European Central Bank, so representing the Euro system. And at the ECB, I'm in charge of the functional aspect of a wonderful project called Consolidation, whose primary goal is to replace our new RTGS as well. So among other things, I think we will talk about RTGS and ISO 20022. These are topics that I'm familiar with, and I'm very happy to discuss with my colleagues and with you guys. And as well, an experience in private sector, financial institution, primarily with an IT background, but now focusing on this project consolidation projects.
Excellent. Thanks very much, gentlemen. So before I'll turn it over to ask each of the panelists to provide an update on where they're at within their respective jurisdictions. But just to set the stage, when we think about Canada and where are we in terms of our modernization efforts, obviously we kicked off this work. It's hard to believe it was about 5 years ago when we defined our ecosystem vision for a modernized payment system. Of course, key to that was a modernized high-value payment system. And we made obviously significant progress following those, the issuance of the vision, the procurement of our application provider, SIA, procuring the lead technology partner, IBM, and we've been working extremely closely with them over the last few years to get to the point. And pleased to say, of course, that even through our experience over the last 15 months with COVID, we've made exceptional progress. At this point, we are nearing the completion of our industry test phase, which will wrap up at the end of this month. The supporting legal framework is in the final stages, and implementation activities are ramping up. Again, we are less than 90 days before we go live. So a lot of excitement and really getting down to the final preparations for the first release. Of course, the way we defined our approach and plan is that we would implement links in 2 releases. Release 1 going live in Q3 of this year, followed by a second release implemented in late 2022 that will enable ISO 20022 messages, very much aligned with the global adoption of ISO 20022 that SWIFT is spearheading. So when I think back in terms of where we started and our objectives around modernization and replacing our existing system, the large value transfer system, we were very much focused on replacing aging technology with modernized technology. We were looking to implement a new risk model. For Canada, the implementation of a real-time gross settlement is new compared to the risk model that is in place in LVTS. One of the key pieces as well, of course, is enhancing security. Obviously, a particular focus on cybersecurity and resiliency, safety and soundness, of course, being paramount to all of the market infrastructures, but really embedded within our mandate at Payments Canada. And obviously, there being a focus on data and reporting, leveraging new tools, APIs to drive efficiencies when we talk about ISO 20022 as well. So really, these objectives have been guiding our work as we have progressed. And throughout the plan, of course, it hasn't been without its own bumps and a few curveballs, but we've really worked together with the industries, with our partners, to set ourselves up for success and really to be ready for implementation later this year. So what I'd like to do now is have each of the panelists just give a brief update in terms of where are you, what are the kind of the key elements in terms of the status of your current programs for renewal and modernization, and then we'll jump into some questions. So Jean, perhaps if I can start with you in terms of where you're at with, you say, your consolidation in T2, T2S.
Sure. Maybe a little bit of history as well. As you mentioned, Mike, this is a long journey. So at the ECB, the journey started back in 2015 with a strategy review called Vision 2020. That was ambitious at the time, but in 2016, nevertheless, the board and the governing council decided that it was about time to modernize the RTGS. We have indeed different platform with different history. The current RTGS target, namely target 2 now, is dating back 2007. Our securities, target 2 securities, has been launched in 2015, whereas our instant payments platform has been launched in 2018. So you can imagine the discrepancies and the legacy systems mixing up with new technologies. So actually, one of the goals is to re-architect and to rebuild the RTGS with modern technology, modern architecture, and as of day one, thought through the ISO 20022 lens. So it was decided as of day one that we would be using to the full extent possible ISO 20022 for the new RTGS, plus synergies between those platforms and try to find, let's say, common components that could be reused transversally. After all, we are in a data-centric world, so our data repository, data warehouse will be used across all those services. Where are we? Still finalizing the development. Nevertheless, we have started no later than yesterday the so-called central banks testing. So it starts, in the Eurosystem by all national central banks testing the central bank's operations. This, as I mentioned, started yesterday and will last for the next couple of months or a little bit more towards the end of the year even. So we are just starting the testing phase, the go live being still planned for November 22. So in the meantime, we will be delivering more and more functions to the central banks. And at the beginning of December, the payments banks, so the market participants, will be able to start their testing phase. So basically, this is where we are with this consolidation project.
Great. Thank you, Jean. I think we've run into some technical difficulties, and Richard, we are looking to get him reconnected shortly. But so I'll pass it to James at the Bank of England. How have you been progressing on your renewal program?
Sure. So again, it's a fairly long story. We issued our blueprint, as we called it, for the new RTGS system in 2017. And really started the project in earnest in 2018. Last year, we appointed Accenture as our technology delivery partner, and effectively, they have now built essentially again, it's a two-part thing. So they've built the first module for the first go live event. And we're now starting testing. And the first module is the messaging side of the system. So we're moving to ISO 20022 first before we introduce the new core ledger, which will itself obviously be based on ISO 20022. So our first go live event is in 12 months time. We switch over to ISO 20022 in June 22. And we literally at the beginning of this week, it was the deadline for all of our direct participants to finish the first phase of testing, which was just a bilateral exchange of ISO 20022 messages according to our published schema. We then in November start with the proper round the loop end-to-end testing phase. We go live with ISO in June next year. And then the next big event is the new core ledger, which will go live in September 2023. In the meantime, we've just celebrated the 25th anniversary of our current RTGS system, which is a good milestone, but nevertheless tantamount to the fact that it really is time to start replacing it. And really a key driver, and similar to what Jean said, the current system is old. We've taken it about as far as we can. And let's be clear, about as far as we can is 12 by 5 operations, because there's an awful lot of overnight batch processing. And it's admitting as many new participants as we can, albeit every time we admit someone to our HVPS, that's a hard code change. And frankly, that was fine for the world of the 90s, where it was all the old clearing banks and they were the only ones who dealt with us. But it's just not maintainable for today's world. So it brings us a lot more flexibility, fewer technical barriers for people to join, but exactly the same points that you've made around resilience, around access to information and reporting, ability to support new innovative services. Those really have been the key drivers throughout. And one of the other things actually we were reflecting on the other day is that blueprint is now 4 years old. Actually, what we need to do next year probably is start to consult on, right, we'll have the new system in place, hopefully come September 2023. What services are we going to launch over the future kind of 2 or 3 years? So 2024, 2025, probably into 2026, and in what order? Because actually, I think demand has slightly changed over the course of the last 4 years, and an emphasis has changed. And we could kind of discuss some of those points later. But that's kind of where we stand, all on track, and not quite as close to go live as you are, Mike. So the nerves aren't quite starting to jangle so much, but very much on that road.
Excellent. Thank you. Yeah, definitely. So, nervous butterflies, I guess, but in anticipation of the excitement of going live and getting ready for that implementation. Great. Okay. Well, Richard, over to you, just in terms of updates on where you are in terms of modernization at the clearinghouse for chips.
Well, thank you, Mike. And I was just about to congratulate you on being on the eve of your first implementation when my internet connection dropped. So I'm back via hotspot and the help of my teenage son. So always great to have a contingency plan in place, for sure. But like my colleagues, we are in the midst of a firm-wide effort to modernize our technology platforms, which we have branded SIP, which stands for Strategic Infrastructure for Payments. This effort applies across the firm and canvasses CHIPS, which is our high-value platform, the Electronic Payment Network, which is our HCH platform, and our real-time payments, RTP, which is our instant payments rail. And as it relates to CHIPS, I will suggest that SIP really consists of 4 main elements. First, modernizing core modules of the CHIPS application suite from legacy to Java-based code. Second, modernizing our environment, taking advantage of a mix of mainframe, distributed technologies, and cloud-based architectures. And yes, I did refer to mainframe as an ongoing element of our strategy for core processing, reflecting both reliability and security interests, both of which we feel need to be bulletproof. Third, achieving greater technical and channel diversity to enhance resilience and expand participant access. And finally, enhancing reporting and analytical services to offload legacy processing and also to deliver greater stakeholder value. With respect to modernization, I might offer just 2 high-level observations. First is that in a rapidly changing world, it is abundantly clear that our modernization efforts really will never ultimately end. Discrete elements may conclude, but in this sphere, either we are progressing or inevitably regressing. There is no stasis, and we are never done in this domain. A second observation is that modernization efforts are not an end unto themselves, but means to ends in support of business initiatives such as standardizing message formats, extending operating hours, enhancing the cross-border experience, levering liquidity savings. And I look forward to a discussion of those and across the panel with all of you and our participants today.
Great. Thanks, Richard. And I think that's a good call out that, this is the first of many, for when I think about our own program in modernization, and, we have obviously key objectives and milestones around system changes and implementations of capabilities and what have you, but it's an ongoing initiative that will continue, and that'll be the evolution of ISO, the evolution of interconnectivity in terms of the global community, which very much fits into one of the questions that we want to get to around cross-border. So it sounds like there actually are some kind of key themes around some of the drivers for modernization. We've kind of heard around obviously technology uplift, introduction of modern technology, around data and message specifications. Just wondering, are there some things that may be slightly unique to your specific jurisdiction around the domestic community, around perhaps what you were hearing from the customers, from the financial institutions, that you were thinking about when you were obviously planning out your work in terms of capabilities and some of the kind of those core objectives. And maybe to go back to you, Jean, are there a couple of things that you were focusing in on when you were thinking about, dare I say, delivering value to the community, kind of those drivers in Europe?
Sure. I'd say by the nature of the jurisdiction, of course, we had to take into account the specificity of many different specificities. For us, talking with 19 national central banks plus those who have joined the system, modernization is immediately accompanied by harmonization and standardization. And of course, we have to talk with 19 partners, and we are all together building this platform. So we have to take into consideration the specific local specificities. Sometimes, let's say, the democracy or the majority wins, and we cannot accommodate all the specificities. But this is the rule of the game. So indeed, this is the, let's say, the national specificities are taken into account in a democratic way, reporting to this market infrastructure board that we have. But of course, there are things that we have to leave out. So modernization equals harmonization on our side. And sometimes harmonization means that we'll need to leave out some specificities.
Okay. James, from your side, anything that's unique in terms of what discussions you've had with the community from a bank, from a UK perspective?
Yeah, so I guess one thing that's quite different about the UK, and particularly the way the UK financial system interacts with our RTGS or HVPS system, is that it's a very highly tiered structure. I mean, there were 16 clearing banks basically at the point the RTGS went live in 1996. We still only have 35 direct participants, and let's be clear, 15 of those have joined within the past few years. One thing that became very clear, and that kind of goes back to the hard coding point, is that the technical obstacles to joining the current system are high. The infrastructure requirements are high. Even the work required by each participant when another participant on boards is high. And really one of the focuses of the new system is we have to increase access. We have to make the new system that much more accessible so that people can directly participate in the system. And that is both an innovation kind of point of view. People can, provide the services they want off the back of participating in our system. There's also a broader financial stability risk from tiering as well. It means that some of the banks are banking an awful lot of institutions. And actually, when you think about, banking resolutions, having that structure is not very helpful. because you need to provide that continuity of service. So that was absolutely one of the areas where I think the UK is different. It's also different in some respects because we have so many non-bank participants, payment system participants. That's what drove our initial kind of, well, we will open up access and we see a way of doing this. Again, the technical barriers are a real problem. And indeed, the fact that we're still on MT and most of the new challenger banks, most of the new non-bank PSPs are already on ISO 20022. So actually that was a key element. The other thing I think that was fairly unique in the UK is just at the point that we decided we needed to review our wholesale system, Pay UK, which operates the retail clearings, was saying, actually, we need to change our systems as well. Faster payments obviously got started in 2008, but actually that system is kind of reaching its limits. And indeed, that really has taken off, and they need a more scalable system behind it. And also BACS, the kind of 3-day clearinghouse, I mean, very good at what it does, but the messaging language is very, very limited. So Standard 18 was actually designed for punch cards in 1968. And that is still the language, which means basically you can convey almost no information with your payment. It's limited to 18 characters. That clearly needs to change for the modern world. So there's been a lot between us and the retail system on trying to harmonize how we implement ISO. So we have a common PAX 8 common credit message. So it's been both about the international harmonization, but also the domestic harmonization for retail payments.
Okay, great. So Richard, south of the border, what you've been thinking about your drivers?
So one of the distinguishing attributes of the CHIPS network is its cross-border orientation. And over 90% of all payments transfers on CHIPS have a cross-border leg associated with them. So the cross-border themes and support of cross-border efficiency in terms of message standardization with respect to ISO and extended hours really dominate our consciousness right now. And we have very active work streams supporting both of those interests. I would posit that the world in which we operate is no longer one that is constrained by either geography or time, and secondly, that non-bank competition in payments continues to accelerate and barriers to entry continue to decline. So this is a real focus for our work on CHIPS and at the clearinghouse in support of the cross-border functionality going forward.
Yeah, there's definitely some, as you say, some themes around that, the competition and innovation. We talk about access and then the data and the structured data and those things. And I think that's a good segue to our next question, to think about, high value systems are interconnected, whether directly or more indirectly through correspondent banking between the financial institutions who are participating in them, leveraging obviously networks like SWIFT. And, so we support that interoperability. There's been significant progress that has been made, in areas and with the implementation of things like GPI that SWIFT has been spearheading. But there are gaps and there are still challenges. And with some of the work coming out of CPMI and the FSB last year, they published their reports on the frictions and focus areas in cross-border space, and defining, obviously, a number of these building blocks to look to address those frictions and what can be done. And the roadmap that was published last fall by the FSB, thinking about how do we enhance existing payments infrastructures and arrangements, looking at data. We talked to Jean, obviously mentioning harmonization and what we think and how that's defined as well. And just wondering, when we think about, the activities that are going on there, obviously it's a broad scope when we think about cross-border. It's low value, it's high value. But given that, high value payment systems and the RTGS systems operated by central banks and private industry have been around for a number of years, and we're going through this modernization efforts. What do you see as being the role, or what is the opportunity, I think, for us in terms of the operators of the high value payment systems when we think about those building blocks and the ability to look to close some of those gaps that have been identified through the report. I'll go back to you, Richard, to start with this one. I think you were kind of really going there when you were thinking about, obviously, the drivers on your side, and because of, I think, as you say, with chips being perhaps somewhat more unique in terms of some of the traffic in there. How are you thinking in terms of those opportunities or the ability to try to work through to close some of those gaps to obviously reduce the friction in the cross-border space?
Well, as you note, Mike, this is a domain that continues to be plagued by high costs, inefficiency, opacity, and the CPMI and other official bodies have rightly heralded these concerns and really put a charge out to the industry to resolve some of these issues. And I think, as particularly a private sector infrastructure, we need to respond to that charge as aggressively as we possibly can. And I would note maybe a distinction between cross-border and cross-currency. And I'll suggest that the correspondent banking regime supports cross-border pretty well, but the cross-currency dynamic, I think, is a greater challenge, especially when the pressures toward real time continue to accelerate. And that's something that we're reflecting upon, very seriously regarding, increasingly perhaps direct connectivity between infrastructures and how that cross-currency challenge can be addressed and solved in addition to the cross-border. I will suggest, and you noted rightly, the correspondent banking model is the anchor, for the existing cross-border regime. The pressures on that model right now are extraordinary in terms of new entrants in the marketplace. And I will suggest that infrastructures and banks reliant upon those infrastructures need to contemplate what the world looks like beyond the correspondent banking regime. And those conversations are rich and need to continue and have been helpfully inspired by many of the official communications, including, the work by the CPMI. Okay,
thanks. Jean, I think this probably something near and dear in terms of the European community as well, and cross-border, and what's been doing in that, and what's been going on, in that space. So how have you been thinking about the report and addressing some of the frictions within your modernized system?
For sure, we're paying a lot of attention to the CPMI, especially when it comes to the cross-border roadmap. If I take a look at two particular building blocks, the first one, the obvious one, and we talk about ISO 20022 since the beginning, I think we are doing a pretty good job because, as I mentioned, the renewal of our RTGS is based on the adoption of ISO 20022. But it should not be considered as the end. It's just a start. So it's a building block, which is a foundation for building in the future something else. As you know, already we are in the middle of the bridge. We have to wait until 2025 for the full implementation of, or the full merger on the ISO 20022 messages without the legacy. There are other CPMI task force working on structure, address, etc. So we are in the middle of the bridge, And in any case, it's not the end, it's the start. So that's the first important message that we relay as well within the market participants, should they be national central banks or correspondent banking. It's just a start. So it's wonderful to think that we are just in the middle of the start. And I start thinking, like James, that it would be time to start a new strategy, which will now become Vision 2030 or even Vision 2040 there. The second building block, which is interesting for me, is the API adoption. We have rework our RTGS, for sure modernized, but still in the same paradigm that we are providing to the participants a fully fledged application, providing the interface, the infrastructure, the GUI, the graphical sphere. I'm really looking forward for the APIization of the payments market to see what the future will look like. So this is another building blocks that we in the Eurosystem will pay attention to. Of course, Richard mentioned cross-border is important, but cross-currency. We are starting a consultation on cross-currency. We have to make a stance on the Eurosystem. As you know, our RTGS, has been built multi-currency by design. The Swedish krona is joining us. You know that the Denmark has also shown some interest to join the target market. Still, I can travel as a European citizen to all those countries, but it would be nice for a customer user experience if I could pay directly to those currency as well. So cross-currency will be, I believe, a topic for the Eurosystem as well.
Okay, thanks. And maybe, I know, James, you highlighted it earlier that there's been a big focus around access and increasing access on your side. Obviously not just necessarily with the domestic focus, but that's really one of the key things also coming out of the report, and one of the building blocks, looking to expand access and to obviously support beyond the, traditional deposit-taking financial institutions. What else from your side, or maybe if you want to expand on that, or if there's other things that you're thinking through in terms of how we address the frictions when we think about high value for cross-border?
Yeah. So you're absolutely right, Mike, on access. That has been an area of focus. Unfortunately, it was already an area of focus for us. But let's remember, this report has 19 building blocks. And let's be honest with you, the reason it has 19 building blocks is because it's a multifaceted issue. The reason why I think cross-border payments problem hasn't been solved to date is actually each one of those 19 actions really needs to come together in order to break the problem, or at least a significant combination of them. I think one thing that certainly the report has made us maybe, and maybe to some extent the industry was changing its mind already. By the way, I do absolutely agree on the APIs point with Jean. Interestingly, when we were launching our blueprint in 2017, we put APIs in and there was muted interest. And I think suddenly the last 2 or 3 years, everyone's gone, actually, no, APIs are definitely the way forward for delivering services, including the traditional banks as well. That's been key. The other thing I think is around the operating hours and the fact that, the world is still pretty siloed in terms of each person has their window that overlaps with each end. So our system closes in 15 minutes time. Well, that was the US and Canada morning done. People realize that it really needs to be much more 24/7 if they're going to use HVPS to deliver their needs going forward. And it's both the hours of operation, but also highly linked to that, the liquidity management and actually the opportunities that 24/7 would offer in terms of being able to manage your liquidity on a truly round-the-clock basis. So I think that is a key area of focus for us. And again, when we extended our RTGS a little bit in 2016, there was zero interest in us going beyond that at the time, which is just as well because our system couldn't really do it. But again, 24/7 again is really clocking into everyone's minds, particularly around those who want to offer innovative services. And people don't want T+1 instead of T+2. They don't want 2 or 3 hours time. They want a minute's time max. So we have to adopt for that world.
Yeah, yeah, no, very very telling, and I think you can take that in a bit of a direction, and we know we won't have time to get into it, but thinking about the reliance or the interoperability potentially between real-time systems and high-value systems, as you say, from a liquidity management perspective, ensuring that there's access to funding and access for obviously innovative solutions. Obviously, that may connect in and require settlement on the books of the central bank or within obviously the risk model associated with a high-value system. So I'm going to pause there, and I think I'm going to take a look here to see. I know we've got a few questions that have come in from the audience. We've got a couple for James at the Bank of England. One of them, I guess it gets into your procurement around the build versus buy. And I don't know, perhaps if you may want to explain that, but if you were to be starting now, would you be looking to purchase a solution as opposed to building one? Since obviously you were rather adamant that you said no, we would be building a solution versus buying one.
Yeah. So the simple answer to that is I wouldn't change what we've done. I would definitely still look at building our solution, and I think that is around the flexibility and the future proofing, both to ensure that the transition from the current UK arrangements is as smooth as possible. So things like the multilateral net settlement service that we offer, which is fairly equivalent, the Fed offers a fairly equivalent NSS service. That's the kind of service which isn't necessarily available off the shelf. I mean, I know it's not available off the shelf because we've just had to register an ISO 20022 message for it because there wasn't one that fitted the bill. So it was both about that, but ensuring that also we kind of future-proof the product in the right way as the world gets kind of faster and faster. So no, I wouldn't look at changing it. I'd have loved to have predicted COVID because that's caused us, everyone's caused everyone a few headaches, although probably not as bad as we might feared. And actually, because I think we recognise, both us and our supplier, that was an impactful event on both sides. In many ways, we've kind of worked closer together as a consequence of it. So absolutely, I'd still build the solution as we're building it.
Yeah, and I was tempted to explore that a little bit earlier, but I thought I would leave that, given that I think it was shortly after your announcement of the vendor where basically things started to shut down. So definitely makes it more challenging in the environment, as you say. But you know what, you've got a strong team and you can work through that. Then it shouldn't have any significant impact on it. So that's good. Jean, maybe I'll turn to you on this one as well here. They're asking you about how do you see ISO 20022 driving interoperability amongst global financial market infrastructures?
It's an interesting question, and actually I'll continue what James was saying. The adoption of ISO 20022 is not the end, it's just the beginning. And the fact that the Eurosystem, similar to the Bank of England, is building its own platform, ultimately we are providing services which are, it's a bit of a shortcut, but it's a bit of a commodity for the users. But the implementation is key to keep flexibility, future-proofing, and the fact that it is internally built. I would say the platform, relying on standards like ISO 20022, will be driving the future. So I will revert a little bit. I'm not sure that ISO is driving the interoperability. It's a fundamental building block, but it's a commodity to reach out and to have a common understanding of what ultimately a payments is. What is driving for me the interoperability is a bit higher in the layers. So it's the agility in our case on how do we implement the monetary policy tools, and we have to change on a regular basis. COVID-19 certainly will have an impact on that as well. So I wouldn't necessarily see the ISO 20022 driving the interoperability. It's part of the chain. It's part of the value chain. It's an important part yet. But what is driving us is this internally built solution, which we can steer in whatever direction we want.
Yeah, and I think that's it's very key to call out. It's one of those enabling pieces, really, and it's how you decide to use it, and it's the definition of the usage guidelines, in the international community, and recognition that our organizations, along with a number of others, between some of the other central banks, market infrastructures, we work very closely together to ensure that we have alignment. Obviously, where necessary, there may be some slight divergence based on domestic needs, but that we work very closely to ensure we have alignment and that we do not put ourselves, out of place. And that's an active discussion within the FMIs to ensure that as we move, whether it's versions of the message specifications, and particularly even usage guidelines, that we're conscious of what each other is doing, at least as an awareness and an understanding as to, does that have an impact on me? Where are my flows in terms of, obviously from our perspective, there's obviously predominantly a north-south into the US, but obviously also across to Europe and even within Europe on that as well. There is one more question. I think we're down to our last few minutes. So I think what I'm going to do is hold off on the question in order to ensure that we have time to allow each panelist to kind of give us some closing remarks, just in terms of where they, I guess, what gets you excited, dare I say, about high value payments, and kind of what the future holds for us. There's obviously a significant amount of work coming up over the next years, at least the next couple of years, to get through that. So maybe I could start with you, Richard, in terms of thinking out over the next kind of 18, 24 months. Where do you see this going, and kind of what's kind of getting you excited in terms of the high value payment space?
So first, I'll just note that I've appreciated Jean's observation that the ISO migration is not the end, but the start, so much that I've written it down in my notes, and hope to use that in the future, because I think it is so true with respect to the current landscape. But with respect to what really excites me over the next 2 to 3 years in support of that cross-border experience, I will suggest is the push to 24/7 operations, which I think is foundational as a prerequisite in order to realize some of those cross-border aspirations. We just all need greater overlap with respect to the operating profiles of our various infrastructures, and making chips a 24/7 platform is something that's very high strategically on our consciousness and that of our governance. You may know that we extend the operating day by an hour last March. I'll suggest that was a tactical step in support of our larger strategic ambition. And there are lots of reasons supporting this in terms of opening new markets, in terms of supporting cross-border activity. I'll also suggest, and this is a bit more of a defensive play, it mutes some of the migration to offshore platforms and also mute some of the incentives for new technologies and digital currencies as well. So 24/7 is a dominant theme of our strategic landscape forward.
Okay. Thanks, John. From your side, closing remarks.
Thank you. So we mentioned earlier, so the world is becoming faster and faster. Still, those journeys takes a long time. So we need time to reflect. You mentioned earlier, Mike, the dialogue, the permanent dialogue, the close collaboration with all FMIs and all parties is key to succeed in those journeys. Still, they take a long time. So we are, I would say, in the middle of the bridge. In our case, we are a bit closer, but not as close as you are to the go live of our platform. So in the next 2 to 3 years, we will still be looking forward to the ramping up on our new RTGS. Cross-border will continue for sure, following very closely what is in the sphere of CPMI, HBPS+, CBPR+, and so on and so on. Cross-currency, it's still a question mark in the Eurosystem. We'll start the consultation. Access will become key, or is key, but will become more and more prominent. We have a different stance when it comes to 24/7. We have extended hours in the sphere of high-value payments. 24/7, of course, by default in the instant payments, but here in the Eurosystem, we're not that sure on the high-value payment system that this would bring much more things. So I have to distanciate from my colleague here. In the Eurosystem, 24/7 is not on the table yet for the RTGS.
Okay. And finally, over to you, James, a couple of minutes just in terms of your closing remarks. And
Yeah.
where you
So I
see
think
things.
the next couple of years, the focus really has to be on the delivery of ISO 20022, and I mean the effective delivery across the end-to-end chain, because, you know, as has been said, that is the foundation, and that is the base on which we can then create new products. So I know some people have said to me recently, well, isn't ISO 20022 all a bit out of date? You know, it's all XML. I mean, in aspects, yes, but let's be clear, the APIization of ISO 20022 is clearly happening, and it's happening right now. And it's that, I think, is the absolute base, because I think with ISO 20022, I don't think we've realized what we've created and the possibilities that it will give us yet, because people just haven't thought of some of the innovations. So laying that base is absolutely key. 24/7, you know, I don't see it in the next couple of years for us. I actually think there's a few policy questions to work through as a central bank when you live in a 24/7 world, which we will need to be thinking through. But that's certainly on the medium term. And then digital currencies, who knows when? But again, certainly not the next couple of years.
Yeah. Can't have too many discussions without touching on digital currency and that. So, well, thank you very much, everyone. Thank you, Jean and James and Richard. This has been an extremely enlightening panel. Thank you very much to our audience, to participating and listening in for our session. I know we weren't able to get to one of the questions, but I would encourage you, if you want to continue the discussion, please use Brain Date. You can, within the main summit page, you can click on the network link to navigate through to there to engage delegates in the discussions and continue throughout the rest of the summit session. So again, thanks everyone. Have a good afternoon and enjoy the rest of the summit.